cybersecurity market and Nixu's position in that market. And obviously it's a very interesting space as a lot of things are happening constantly and it's a very changing market. Nixu has a mission statement or purpose of keeping the digital society running, which we coined for ourselves in 2014, highlighting the fact that security or IT security or information security is not only about the protection of corporate assets like email or internal networks and so on, but increasingly it's about the whole digital business and digital society here. And this nice picture is taken from a World Economic Foundation, World Economic Forum's picture and from their published report, Our Shared Digital Future. And that was a very, very interesting report, quite a good read anyways, but there was very good thoughts also from digital society perspective. And they highlighted 6 shared goals that were goals that in order for the digital society to succeed, the world should come together and find solutions in achieving these 6 things. And those ones there in bold and highlighted are the things that actually connect quite nicely into what Nixu is doing and what is Nixu's mission statement. I'll go quickly through all of them to just to give you a glimpse of this. The leave no person behind, obviously that's related to the access to the internet and access to the digital services, especially in the developing world and so on. But then the next one, empowering users through good digital identities, is a very, very tightly connected into Nixu's mission statement and the work that Nixu is currently doing as well. How can we as citizens, as consumers, use digital services in a way that there is no misconception about who we are when using those services? How can we use different set of services as our unique identifiers? What is the digital identity of ourselves? What's the digital equivalent of passport and so on? And this is a very key question concerning most e-government platforms, the whole, let's say, the government side of society, but more and more also and increasingly more on the enterprise side as well. So how do you as a consumer authenticate yourself to a certain service? And when you are using many services, how do you combine that data together and are able to, first of all, get yourself a good service and from the company's perspective to identify you as you and serve you the best and market services better to yourself. Make business work for people, a very high-flying goal stating that the digital society is not only about the government, it is about companies providing those services that are key to make digital work. Not that relevant to Nixu case, but then the fourth one, again, a very important one. Keep everyone safe and secure. So how do we make certain that this society exists, it's resilient, and everyone's identities are protected, they don't lose their identities and access to the services. Obviously very key to Nixu's mission statement and cybersecurity as a whole. Building new rules for a new game means that the legislation needs to change in order to digital society to work. The old industrial age rules and regulations might not work in the digital era, and that needs to work. And then the last one, breaking through a data barrier, means that with big data and all the sensors coming in, there is such hard amounts of data that they need to be accessible, they need to be connected, they need to be integrated. And again, this is a task that unless cybersecurity professionals, cybersecurity companies are there helping to do this integration, it's impossible to achieve that goal of getting the data together and to be managed in a secure way. So very, very good goals, and obviously placing cybersecurity in a very, let's say, hotspot for making the digital society work overall. The graph on the right side is an online data security and privacy study performed by research company Gartner, where they were asking that how concerned are you about each of the following, and obviously this is a consumer study, but that highlights the fact that finally the perception of consumers of customers of the companies is that you don't mess up with my data. You shouldn't leave my data vulnerable, and if my data is breached because of you should be responsible for that. And that's of course driving the market forward quite highly. Cybersecurity is a event that's typically cascaded down the value chain. So somewhere there's a demand by the client, and that makes a company act. And typically company also has other supply chain partners, so they pass down the same demands in their supply chain. So it is getting very critical to the process. And for example, this first line here, my online accounts being hacked, taken over. 33% stated that this is extremely concerning, and 42% stated that it's somewhat concerned. So very high figures, and actually quite a lot of respondents in this study as well. And I think this is I've been in the industry since 2006, and I recall meeting some clients in I think 2007 or so, and they were stating that we don't really have anything confidential data in our organization. We might have our CRM system where we have our client data, but who cares if it's stolen? I don't care. We have a copy of that somewhere, and it's not really that important. I don't know whether that person has read the GDPR or listened to their clients lately, but I think that their thinking has changed, and that has been a thorough paradigm shift in a sense that how do we protect the assets that we have? How do we protect the data? And then when you add the integrity of the data, the resilience of the systems that are relying on digital systems, that adds up a total different layer. So things are getting serious. And that's being reflected. And of course, this is only the consumer study, but we can see the similar side in the B2B side, which actually from Nixu's perspective is maybe the even more important, that in different parts of the value chain, the clients are pushing down contractual requirements to protect the data, protect the supply chain, create cybersecurity controls that verify that nothing gets broken. This is another Gartner slide, quite a busy slide, so bear with me. This explains let's say the need for a holistic approach for building up trust and resilience in a digital systems. And from Gartner's perspective, there are the technology drivers. So there are different technologies that are built up to support the digital security and also the digitalization of systems. But then at the same time, there are also environmental drivers, people and processes, owner accountability, integrated risk management, and then business drivers that are affecting this picture. And why I wanted to show this picture is to drive the understanding that cybersecurity is not about technology. Technology is very important for cybersecurity, and the different technologies that are being developed currently are very important in let's say, making cybersecurity more efficient, making things happen on a digital world. But it's not only about technology. No one can claim today that they are solving cybersecurity issues by adding more technology or adding more technology components. It needs to be a very holistic approach. It needs to be approached from multiple sides. And I'm sure if Tomi Pitkänen would have been here today, he would have concurred with this thinking that when they are building Neste's cybersecurity, they need to consider lots of stuff. It's not only about adding stuff, it's about building up processes, it's creating awareness in the employees, it's adding those contractual clauses in the supply chain contracts and so on. So there are quite a lot of things in addition to technology. And this is also another slide from Gartner. They call this a Kartta model, which is about adaptive cybersecurity and how do you build up your cybersecurity capabilities, and how they qualify this is that you have a layered approach where first of all you have this attack protection where you are able to prevent attacks and predict them and then protect yourself overall. But then you have also the access protection. How do you manage the usage of the systems? How do you build up this, as they are saying, let good stuff in, access posture, and the outer layers keeping bad stuff out, defense posture. And then internally, then you have a policy and continuous compliance and monitoring this whole wheel thing. And what I want to highlight here is that Nixu is perfectly positioned towards this sort of an approach in building cybersecurity. We have the capability to affect our clients' policies and processes. We can advise them on that, on risk management, on security management. That is the internal layer. Then there's the digital identity management, and then how to build up those systems, how to build up this let good stuff in access posture in a way that is efficient. It enables good usage. It makes digital services usable, first of all. And then, of course, there's the cyber defense capability, which I think that when talking about cyber security, that's the most highlighted thing. That how do you find vulnerabilities? How do you break defenses by testing them, by breaking them? How do you detect cybersecurity breaches and so on? But that's only part of this whole thing. For a client to receive and build a total cybersecurity posture, they demand that they are active in all of these layers. And again, as a good cybersecurity company that is helping the clients, you want to be active in all of these layers and helping the client to build up their posture. Now I noticed I had one additional slide left in the presentation, but then talking about the market sizes, and this is data from Gartner again, from Western Europe, and the market growth in euros in Western Europe in different segments. There's quite a lot of different segments. I highlighted, let's say, the two most important from Nixu's perspective: the identity and access management segment, and then the security services segment, which is the most the let's say service component, and the others are maybe more software and technology based. And here we can see that the overall market in Western Europe is estimated to grow a little bit below 10% yearly overall. The security services, again, about at the same range, as it's one of the largest segments here. Identity and access management growing a little bit slower in the beginning, but then rapid increasing their growth pace in the early parts of 2020s. And then, of course, there are new arising segments like cloud security, where the growth percentages are much higher. And obviously, it's good to notice that there are these areas like network security equipment that are not growing that fast. Typically, these are like firewalls or switches and routers and so on, which have typically been the bulk of clients' investments in cybersecurity. But this is rapidly changing in a way that clients need to invest into new areas and new components as well. And the kind of from Nixu's perspective, the good thing is that we don't really have that legacy revenue streams in our revenue. What we are doing is we are building up new services, we are building up new capabilities that the clients need, but they have not invested into earlier. Let's take questions if you have on the latter part of the presentation. And following this segment thinking, talking about the competition environment and the different players in the field, I've been using this slide quite a lot. I did some modifications to it now to kind of highlight the change that's happening in the marketplace, and I want to kind of maybe talk this a little bit deeper than I've usually done. This picture has six different players. There are the three generalist entities that are present pretty much in all the markets across the world. There are the telecommunications carriers, operators that are typically trying to enter the cybersecurity market and offer mostly managed security services. So they are building their capability into that direction. Then there are the IT integrators, and then there are the consulting and audit companies that are also active in the cybersecurity market. But these are the companies that are also doing quite a lot of other things in addition to cybersecurity. Then on the bluish area, we have the specialists, the companies that are focused on cybersecurity are doing most of their work in that area. And in that area, you could identify the technology vendors, so the companies that have their own unique technologies and are working around those and selling them, either direct sales or channel sales. And then you have the technology resellers, companies that have been selling those technologies forward to their clients. And most of these companies have been existing for some time and have their tradition in selling firewalls and other network security equipment to the clients. And then there are the cybersecurity consultants or professional service companies that have started from doing the consultancy professional service part and are working there. And there's been quite a lot of change happening in this market space within the last 5 years. First of all, there's been quite a lot of acquisitions and mergers. The latest being SecureLink being bought by Orange from this picture, for example. But at the same time, all of these companies have been moving into their own boxes, so to say. Technology vendors have been acquiring consultancy companies and taking on new consultancy capabilities into their service offering. The technology resellers have been moving into managed security services, so offering the technologies that they are selling as managed services, meaning that they are provided as a service, not as a bulk investment. And then the cybersecurity consultants like Nixu have been also moving into managed security services, and also the technology resellers as somewhat. So there's been the lines around this area have been merging. And what's been happening in this area, I think all of these entities are also pushing towards the managed security services. The IT integrators are coming from there more from the technology resale background. So because of their existing IT outsourcing agreements, they are typically in control of their outsourcing clients' networks. So when the client needs more firewalls, for example, the IT integrators are perfectly positioned to sell those equipments to their clients. And the consulting and audit companies, which of course are most or on their best on professional services, have also been trying to grow up these managed services as part of their offering. And why the managed security service is such a key driver is obviously the change towards the cloud. So the own network and the own perimeter is going away, and the need for let's say own data center and own network protection is slowly going away. It's not going away abruptly, it's not going immediately, but it is going away. And then of course it's always a capex investment as well, and OpEx is ruling right now. So that's why the key is to provide these managed services that are bought as a service, not as a capex investment. And that's pretty much why all of these providers are moving towards being a service providers. And that's of course also Nixu's story. We want to be a cybersecurity services company, not a consultancy company or a pure professional services company. Any questions maybe at this point regarding this picture? Yes. Wait a moment, we'll get the microphone, so we'll get that to the webcast as well.
Yes, the IT integrators obviously are having a pressure of the smaller companies coming from different areas, like in this case. Do you think that their role will increase in the future in terms of cybersecurity, or could they also be interested to acquire some smaller players?
Yes, I think the IT integrators in general are going through quite a big transition because of the cloud. So bulk of the IT integrators business comes from providing data center services to their clients, and when the clients are actually buying more software as a service and straight from the cloud, the kind of the role of the IT integrator, I think, is overall it's a little bit fuzzy and a little bit problematic, I would say, from their perspective. Thinking of cybersecurity, the statement that we are giving to our clients, and which seems to resonate quite nicely, is that you really don't want your cybersecurity to be done by your IT provider, because the IT provider is only providing one silo of your services, and cybersecurity is more a horizontal thing. You need to consider the processes, you need to consider a lot of things outside the IT as well. And you need to consider your factory cybersecurity, for example, where the IT providers typically are not very deeply involved. And of course, the cybersecurity partner is supposed to look after your IT's IT cybersecurity, and if you have those let's say balls held by the same person, then how can you trust that is being done? So I'm not overly concerned about that transition. I think that in cybersecurity you need a specialist capabilities. Obviously, some companies have done a strategic choice that anything that resembles a IT or technology somewhat will give to one company, and they will do everything. But I think that's increasingly changing, and that's because of the cloud adoption. Thank you. More questions?
Hi, Matti Riikonen, Carnegie. What would you say about the birth rate of new cybersecurity consulting companies? It seems that at least years back it felt like there was a numerous number of small emerging companies that then, well, most of them grew, some died, but there was a selection of new companies. And how is it today? Is basically consolidation taking form and shape more than earlier, or is it still that there's room for new entrants, or that at least new entrants think that there is room, and basically small teams could start a new business and have some customers?
Yes, I think there's two things to that. The first of them is that, of course, in any professional service game, if you are a good consultant and you hold some client relations and so on, you probably could start your own company and get at least some initial traction from those clients that you worked and who know you and so on. And that is still happening. So example for here in Finland during the summer, I think we saw at least two different teams starting up and getting away from a larger companies, breaking away from there and trying some niche or trying some new things. So definitely there's a birth rate. Whether it's faster or slower than it's been previously, I don't really have data to state anything about that. And I think that's also a sign in a, let's say, more mature, well, not mature market, but a growing market, that there comes these different layers of players and companies, and the smaller teams and companies hold a specific place and are doing certain things, and then the larger ones are focusing on a bigger things. And I think overall, of course, when we've been getting new family members, that is acquiring new companies into Nixu and talking with their founders, everyone has agreed that the game will become more hard, and the clients are demanding much more holistic service. Clients are demanding much more than they used to demand. So in that perspective, the challenge for the newcomers in this area is that they probably can't. It's not very easy to grow to big size. Of course, you can stay in a, let's say, small field and 5, 6 7 good people that are willing to do subcontracting as well. I think there is a room for that sort of a teams. But in order to be the one who serves the client in a really holistic manner, I think that's much harder than it used to be some years ago. Good question.
You mentioned subcontracting. So do you think that smaller companies would be basically a kind of opportunity for you to do contracted work, so that you don't have to keep every person producing top line for you in your own payroll?
Yes, obviously yes, and we are already doing that actually. So we have a standing rule of trying to get about 10% of our revenue done by subcontracting. But the kind of the challenge is that it's not as flexible as it sounds. So typically when you get some people engaged in their client work, it takes some time, and it's not easy to fix the utilization gaps or so on with the subcontracting, that you just throw out the subcontractors and use your own people, because it's typically very specific competencies that you are acquiring through subcontracting as well. But yes, I think that's the game, and I think this is also what Nixu is thinking, that as we are growing larger and larger and are interested in larger and larger deals, then we need to find out this next layer of teams and people who we can utilize when need be, and they on other time they can work on something else, and let's not be jealous about them. I'm sure that there is a new, let's say, undergrowth of these companies that are serving some clients that Nixu wouldn't even want to serve, for example. More? Yes, Mikael.
Mikael Rautanen, Inderes. So this is a relatively young industry, which is why we're seeing many companies like focusing on growth and taking market share instead of making profits. Do you see that this has resulted in disruptive or aggressive competition, or is this something that is more relevant for the product companies and not so relevant for service companies?
Yeah, this is a good question, and obviously for product companies, I think this is somewhat relevant. Even though I think that they've more invested in the marketing and growth and so on, maybe not so on the price level. So maybe the product companies have not been pushing the prices that low. It's more like that they are very capable of spending a lot of money, and this we can see, for example, by venture capital backed American companies and their profitability figures. I think the biggest risk for this, let's say, over investment comes through the salary inflation and the kind of the let's say overpayment for people, and if that would happen. So far, I think it's under control. It's not that serious, but for example, for us, it's always the case that some American technology companies always able to pay much more than we are able to pay our people. So if it comes to that, we are not able to match the salaries from a product company because they are getting their margin from somewhere else, whereas we are still pretty much getting our margins from the people. And that's why obviously we have the strategic vision of being the best workplace. So there are other things other than the salary that can affect this. But so far I think there is a lot of investment, but it's not. The market is growing also at the same time, so it has not, in my eyes, it has not disrupted the market that much. And still it's a trust business from the client's perspective. So the clients are not, the price is actually not the most denominating reason to choose one provider over another. I think there are much more quality aspects involved. Good, very good questions. Anything more about this picture or the market players? I'll move a little bit more towards Nixu then in my next slides. And then how does Nixu fit into this game? This picture I've shown earlier as well, and just to give you a highlight of how the holistic partner thinking goes. It's first of all it means that we have three different client segments that we want to serve, and all of these segments may exist in the same company, but they are different decision makers. And traditionally, obviously, the corporate and IT security, meaning the CIO of a company has been and CISO below the CIO have been the CISO being the Chief Information Security Officer, have been the key buyers for IT security services or cybersecurity services. But increasingly, especially for Nixu strategy, we want to address these other key decision makers. So industrial internet, industrial IoT, factory automation, operational technology decision makers that reside within the let's say manufacturing companies and in their struggle to digitalize their own business environment. And then from the, let's say, consumer perspective, the heads of digital business, the people who are building up new digital businesses into traditional companies. And they are key decision makers in such that they have the budgets, they have the digitalization budgets in the organizations, but obviously they are not aware of cybersecurity. They don't fully understand the consequences of cybersecurity. So how to talk with these decision makers, how to sell cybersecurity as an enabler, as a let's say business criteria thing, other than fear, uncertainty, and doubt. That has been typically the way of selling cybersecurity. That you threaten them with all the risks, and then it's risk management. Here, I think we need to be more smart about providing them additional value streams, helping their business to go forward and such. And for example, the digital identity business is a good example that if we can help the client to build up a good digital identity for their consumer clients and tie the different services into the same unique digital identity, I think that can actually generate a lot more value to the company for their business and actually generate some business and not only risk management. So that's an increasing tendency for us to find ways of addressing these markets. And then, of course, the things that we do, the kind of the competencies that we have, security management as a service, access and identity management, security engineering, compliance, risk and privacy, they are very holistic. And at the bottom, there's the, let's say, the more operational cyber defense center, detecting cyber threats, doing incident response when something happens and so on. And the kind of the funny thing in this picture is that obviously, unless you would have actions happening in these levels, unless there would be the breaches, you wouldn't need any of these services. But now that there's this cyber crime ecosystem is evolving and happening, then that's why you need to also address these other topics. And from Nixu's perspective, the good thing is that we have the core understanding of the cyber threats. We know what is happening in the market. We are capable hackers ourselves, so we can prove the point that yes, we know what is happening, and that kind of buys us the credibility to also do the other things. We are not only preaching something that we learned from the book, we are actually preaching things that we know and see every day when we are working. Talking about the business models of Nixu services, and maybe the font is a little bit light. I'm sorry about that. But how we are displaying our revenue stream is that we use 4 categories currently, and these 4 categories being the projects and assignments, managed services, continuous services, and technology resell. And I want to use some minutes to highlight the differences between these models. So the projects and assignments, they are the base professional service work that we have been doing. For example, doing penetration testing, meaning that we test the client's security posture, try to hack into that client system, ethical hacking, or risk assessment or digital identity projects. And these are typically time and material based projects. So we bill according to an hour. We get quite nice hourly rates that are of course dependent a little bit on the work that we are doing and so on. But quite good business in itself, but obviously not very scalable. You require much more people or more people in order to grow in this area. And that's why our strategy has been lately focusing on the continuous service components, which consists of the managed services and the other continuous services. And the other continuous services, they represent professional services that have turned into a service mode. Meaning, for example, that if we used to do penetration testings to our clients as a project base, we've managed to offer the client a continuous service. We call it security engineering as a service, where we are doing those at a given monthly rate of billing. And obviously the kind of the hours and used and so on, they are probably somewhat visible still in the background, but still the kind of the big picture is that it's a recurring revenue, and the contracts are long contracts. And then the most scalable part of the business are the managed services that we have been building most heavily during the past couple of years. And there we utilize both technology components and human work. And the technology components are obviously not our own, so we pick and choose the best technologies from the market and embed them into a one offering. For example, the Nixu Cyber Defense Center, the monitoring center that you are able to visit today, typically a client agreement in that area contains components of at least 3 different vendors. So we are picking and choosing the best bits and pieces from different technology vendors and utilizing those and building that into a package to a client, which is offered as a service. And the good part here obviously is in this business that when we get new clients in, the monitoring center doesn't need to add new analysts, like one analyst for every new client that we get, but we can build scale benefits there, and revenue per employee is growing with scale, and obviously also the technology components are possibly scalable. There is no like one formula on how this works because the agreements are a little bit different and the technology components are also licensed with different deals. Some of the licenses we buy in as a bulk and we can utilize them as many clients as we want, and then for some technology components the pricing is also based on how many clients we are serving them with. So it's not like any one easy formula that I could give to you, but that's the basic principle there. And then there's the technology resale component, which traditionally in Nixu has been quite small, and it represents a sale of different technology licenses or technology components to clients that are done as one-off deals. They used to be identity and access management or digital identity licenses typically, and lately, especially with the acquisition of Epitaph from Denmark, we are also having firewall products and some other cybersecurity technologies as part of it. And that also explains that why in the first half of 2019 the percentages grow a little bit higher. And obviously this part also has its risks, as we all saw. We had to issue a new forecast for this year and lowering our guidance from about 40% growth to about 35% growth, and that was mainly due to one lost deal in Denmark from Epitaph about selling firewall products to a very large client. So very revenue-wise, a very large deal, and obviously having a margin, but the margin not being that huge compared to let's say traditional consultancy services, where if we would have lost that sort of a revenue chunk and still be carrying the personal costs for those people, we would be really hurt from profit side. And why we wanted to get into this business, when I stated that it's a little bit legacy business and it's slowly going away, the reasoning being that if we want to serve our clients in a holistic way, still the technology components are a big part of the client spend. And if we are not able to serve those to the clients, then we might be passed away from some opportunities and some deals. So we want to have the opportunity to provide those technologies to those clients that wish them, and then at the same time, while selling the technology components, we get to know them. So we can understand that are these technologies that could actually be provided as a managed service. And that's a really interesting part, because the managed service is obviously the kind of let's say the end goal that we want to reach, but how to reach that, it's pretty hard to build a managed service unless you know the technology already somewhat. So selling those technologies enables us to get to know them and then transfer that business into managed services. And there's been actually thinking around our technology resale strategy during the summertime, and when we first bought Epitaph, we were actually thinking about putting much more pressure into the technology resale, meaning that would grow as a percentage of our revenue fast and even faster. But after examining the market and thinking about our choices and most of all the trends that go forward, meaning that it's not a hugely growing business, we decided that we don't want to emphasize that growth. So we want to sell them when there's good margins involved, but it's not a strategic component in our growth story, meaning that we don't put that much weight into growing that percentage. And this is still, obviously, these percentage points are the ones that are supposed to grow in the future. I might have been a little bit complicated in my explanation, so if there are questions now, please please ask them now.
I understand that it's a bit difficult to quantify the scalability in general, but if we take an example, that if we assume that your current cyber defense center here has some customer volume, if we assume that volume would be doubled, so that your net sales from that unit would double, how much roughly do you think that your costs would increase? Just a ballpark figure.
That's a really good question, which I don't have a answer, at least an answer that I'd like to give right now. So it's still as I said, there are so many different the variables in that picture that it's really hard to give it at this stage when we are still growing the business and so on. There is no like a good ballpark. Obviously, it's easy to say that the cost will not grow at the same pace as the revenue is growing, but where do the line and so on? We haven't given an official statement on that, and maybe I'm not throwing that ballpark here now, even though knowing that many of you would kind of want to understand and hear about that, but sorry.
Yeah, thanks. Harry Brade, Lamio. The question about your scaling and growth, looking at the different business models and the growth of those. So how does it happen in practice? Do your managed services and continuous services grow from conversion from projects from satisfied customers who then want a better service, or is the sales process different and different time lengths, etc.? So if you could touch that, and also kind of churn, how much of the managed services, continuous service, how sticky are those? So once they're in, is there churn in those, and if yes, why?
Yes, good questions. I'll touch that a little bit later in my presentation more deeply, but overall, again, like different services have a different growth paths. But for example, if we take the penetration testing and engineering as a service, that is a growth path that we start typically with the project mode, and then once the trust is built, we offer to do it as a service, and then it's like transformed. Then for some other services, you might actually start with the service from the beginning, but somehow you need to build the trust anyway. Then regarding the churn on the managed services, it's good to note that obviously the main core of the revenue from managed services comes from the cyber defense center, so detecting and mitigating threats to clients, and that service has only been active now for about 4 years. So the kind of the track record and history is still very small. We've only lost, I think, voluntarily one client and involuntarily one other client. So the churn is almost non-existent so far, but obviously that's probably not how it will turn out. So once the clients get more mature and so on, obviously there will be some churn rate, but really, can't say that how much should it be or how should it be. It's also good to note that most of the clients where we are in, the kind of the detection capability is still very limited. So there's very much upsell opportunities within those existing clients for better detection capability. Good questions. I think Mikael had one as well.
Mikael Rautanen, Inderes. About the technology resale, so that brings in 7% of revenues, and I guess it comes in with 20% gross margin. How many people are employed in that specific business? Kind of like, is it profitable as a standalone business?
Yes, that's again a really good question where there is no easy answer, because we haven't organized around this business model. So let's take, for example, digital identity project. When we are doing a digital identity project, we do the project where there is some amount of, let's say, 500 man days of work associated with the project, and then we sell the licenses in addition to that project. So it's a solution where we sell the licenses, and the licenses are then the technology resell, and obviously there's a margin associated with the licenses, and then there's the human work that's profitable by its own right. So in that sense, it's kind of well, it's profitable, but you can't state that how it works. If we take Esenta, where the kind of the technology resale is much more or less human oriented, and there is, let's say, these firewall deals, it is a profitable business in what they are doing. So it's not like something, obviously would make no sense of doing it unless you get some profit as well. So it is a profitable business, and in this area, the more, let's say, the more up and rising technology you go into, the margins tend to be better. Then obviously more commoditized and bulk business you have, then the margins are lower. And it's, let's say, firewalls are a good example, that the basic firewalls, they are very, very bulk, and there it's very much the margin and price competition, whereas some new technologies are so different in their pricing models.
Do you do a lot of bundles where you would give out the licenses with zero gross margin to get into a bigger project, or do you always have some kind of gross margin on those?
We always aim to have a gross margin on the licenses, so we don't want to do that. Obviously, the kind of in a bigger deal, the kind of the overall profitability is what we calculate, and then from my eyes, it doesn't matter if we need to give a discount somewhere, it doesn't matter where the money comes from, but typically we always calculate the margin. Good. Before letting Janne into voice, one final note on the Nixu market areas, and as you know, we are now active in 4 main market areas in Northern Europe, and obviously we have the situation that the market areas are very much in different maturities, and through that different maturities, they have a different target setting as well. So in Finland, we have the highest maturity and most clients, best brand recognition, best profitability overall, and we are also developing a lot of new services first here in Finland because we have the competencies and we have the clients that are willing to try them and get them into, and that's where we are. And obviously from our eyes, to Finland is the kind of the situation base where we want to drive the other markets into as well. In Sweden, we've grown through acquisitions. We've acquired 4 different entities there so far and consolidated those into one Nixu AB. So we don't have any separate entities in Sweden anymore, only one Nixu AB, and obviously bundling all that together and managing that administrational hassle and cultural differences and so on, that has taken some time. I think right now we are starting to be in a quite good place, that we are pretty much the largest cybersecurity provider in Sweden already, and now the focus there is in the profitable growth. So it needs to be growing in a profitable manner and starts adding up into the profitability of the whole Nixu group. Then in Netherlands, where we started with the greenfield, and maybe has been the, let's say, troublesome international area for us so far. There we got a new market area leader joining the company from the beginning of May, a very good professional with a long history in the cybersecurity area and really extensive network, both with the clients and cybersecurity professionals in the Netherlands. And there the task for him is to take this market from, let's say, the startup phase into a scale-up phase, so driving towards the profitable growth. But there's a lot to be done still in that area, and for us, I guess that is the largest market overall, or the largest economy of the markets where Nixu is. So we need to be really on our toes and to be supporting them and not supporting by sending money, but supporting them with the competencies of people that we have here in Finland in order to serve the clients in that area best. And then of course Denmark, that just joined the team in April, beginning of April. It's still acting as kind of its own entity. The integration is still underway, and what we are there trying to do is that we accelerate it straight into profitable growth. So in other markets we kind of did it in a way that let's sacrifice the profits for the growth. In Denmark we are trying a little bit different approach, where we are trying to accelerate the growth but still keep it profitable at the same time. And obviously that means that you have your feet at the gas and brake at the same time a little bit, and being cautious of what you are doing. Even though that Esenta lost the technology resale deal, the fundamentals of why we entered Denmark are still there. The team is good, the culture is good. I think they have a great place there, and then in Denmark there's options for consolidating the market further. So the kind of, clients come and clients go, so there is still nothing has changed from that perspective. And great thing in Denmark also is that we've now managed to open up first digital identity cases, or several of them already with Esenta clients. So Esenta didn't have own digital identity consultancy capabilities, so we've now staffed those from Finland and are already working with them. So now we are seeing, maybe that's the first market that we've been with this speed being able to get into joint projects and cross-selling to existing clients. Good, there was one question. Hanna, can you? Petri.
Yes, Petri Tuutti from VC Asset Management. Today there was news coming out of a Danish company producing hearing aid, Demant, and they issued a profit warning claiming a big cyber attack on the company. So anything
And
you
I
can...
missed that. I was desperately seeking for a good preach to start my presentation with, because I didn't have any like,
yeah, I
written
thought that
preaching,
this is a
but
good question to ask. When you mention about Denmark...
what was the name again? Can we call our sales team?
Demand.
Yeah. I don't know about that. I don't know whether they are Esenta's clients or Esenta is also providing incident response, so they have incident response agreements with several Danish clients. So hopefully they are our clients, but I'm not aware of that situation. There was a question here.
Matti Rikonen, Carnegie. Now that we started to talk about Denmark, one question to the lost technology deal. So was it an existing technology agreement already with that client, which is no longer going to be there, or was it going to be a new technology business that was then not coming?
That was an existing deal or something that was in the, let's say, the comparable figures of the company. So, yeah.
Okay.
Are you still committed to having Netherlands profitable for full year 2020?
There was a still question mark. Did I sometime issue that sort of a statement?
In May.
Yeah, I think that's obviously the goal, and much depends. We're now starting the budgeting process for next year, and we have a new market area leader there. So let's hear. At the same time, we are also investing in the Netherlands. We are starting the cyber defense center operations there. So it's a, let's say, I see it in a way that the kind of the core business needs to come profitable and actually already is, and then there are these like new investment areas that we are building up there, and how they balance and where the profitability finally ends. Maybe that promise I don't want to give, but the core business needs to be profitable. I think that's pretty clear. Yeah.
Thanks.
Good. I managed to spend the client part as well. So seems like we had a lot of things, and maybe at this stage I want to welcome. If no further questions from my presentations at this point, I'll let Janne Kärkkäinen to join on the stage. But if there is any, please get them out as well. Okay, but then Janne, please. Thank you.
Thank you, and welcome on my behalf as well. So Janne Kärkkäinen, CFO of Nixu. So I will go with you through some of the key financials, some KPIs to focus about Nixu, and then in the latter part some information about or view to the Nixu share development and share owning. So let's see, did we miss that? Okay. So obviously Nixu being a growth company, so growth matters, and that's our track record from the past 5 years. And with this year obviously being indicated with the latest market forecast, and that gives us an average growth of around 30% and makes us actually about 3.5 times bigger than we were when we came to the first list in 2014. The growth pattern and the elements there, obviously the 6 M&As that we've done during the past 3.5 years, and also the organic growth, which in this first half was 23%, and last year it was 17%. So it's really combined effort of good organic growth and then together with these M&As that we've done. Revenue of outside Finland in line with our strategic approach and target to become more international, and where we speeded up the efforts in 2016. Before that, our international revenues were around 6% of the revenue. So even we were Finland based, obviously we had some businesses outside Finland as well and operating from here. But then starting from 2016, we set up the operations. We had the greenfield in Netherlands, and then together with the acquisitions, obviously that part of the international business raised quite heavily from from 6 to 36% level by end of 2018. And 2018 we didn't do any M&As, so then the growth kind of stabilized somewhat on that year. Then continuous and managed service revenues also being one of our strategic focus areas, and there Petri already went through with you the kind of the different 4 areas of our revenue streams. So this is the managed service, and then all continuous parts, so basically including those 2 building blocks there. And there we can see that from 2016, where we start with the managed service revenue and mainly consisting of the CDC business. So really from 3 years we have been building a business from scratch to level of 4.7 million euros in 2018, and that growth has continued also heavily in this year as well. So first half this year we were already at the level of 3.8 million euros. Also the average growth there quite nice with above 50% annually, and also the kind of the share of the continuous revenue of the total revenues have increased quite nicely, closer towards the 40%. And there obviously that's the increase in 17, that there we have the acquisition of ESC, the ESSC, the support services business in Netherlands, and also we can see the increase of the different continuous businesses that Petri mentioned, like our Tiger teams also building bigger partnerships, deals. There we have some transformation also that with the big customers where we've already done recurring projects. Then we do a bigger contract with the customer with the let's say committed monthly kind of a service items and resourcing, and then that becomes continuous business in our books. And also outside this, where we have the projects and assignments, there also it's a lot of that is a recurring type of business in a way that we have same customers from 1 year to another, and even though not having a committed continuous service contract with them, those customers still buying separate projects from us. Then to the revenue breakdown per customer, there our revenues are very much scattered between the customers, so there's no one single or single customers like having a big portion of our revenue. So from the risk point of view, it's quite balanced. The biggest customer in first half had a share of 9.5%, and then the second biggest had 4.2%. So not that much dominating, and the biggest top 30 customers having a bit less than 1/3 of the revenues, and having more than 400 customers, and certainly the amount of customers we are looking forward to grow the existing customers, obviously get the new big customers as well, but not that much of having more of kind of single customers with single projects, but aiming on building bigger partnerships and growing the existing customers. So, all right, then about some view to the retention and growth of the customers. So if we look at our top 20 customers, we compared the 3 last years, and really the top 20 customers that we had in 2016, all of those were still our customers also in 2018, and also the customers in 2017 still continued our customers in 2018. Obviously there's some changes there, like customers in a lower ranking taking over and becoming part of the 20 customer. Biggest top 20 customers, as well as through to the acquisition, there are some new customers on that list. So obviously the list is somewhat living through the years. But still also there's like 10 out of the 20 customers are still within the top 20 ranking as well. And also the growth of those 20 customers, so the average size of top 20 customers, it grew by 60% during those 2-year periods, so making the kind of average growth of 26%. Then to our EBITDA development, might be somewhat recap to our first half result release as well. But if we look at the dip last year, obviously we had last year summer we had the listing to the main list. There was that burdened the result, but of course it took some time and effort from us as well. Also, Petri was earlier referring in his market area Sweden to the consolidations we've done there. There was several legal entities that have been now merged as one entity, and also same type of merging of entities that we've done in Netherlands. So we focused on those things in 2018. But then already in the latter part of 2018, we were improving our profitability and really having more focus to the operational efficiency, because of course the loss-making first half there was unintended, and even we've said that we will basically use part of our EBITDA to our growth investments, but obviously the negative figures were something that was a disappointment to ourselves as well. But after that, the profitability started, as said, improve already second half last year and further improving first half this year as well, to the level of around 8% of EBITDA. There obviously we have the kind of boost of IFRS 16, which is around €500,000 in the first half numbers. So from that point of view, they are not directly comparable, but basically the impact of that is around 2 percentage points. So even we take out that, the kind of the curve is pretty much the same anyhow. Then some view to the EBITDA of Finland versus our international operations, and what we have been telling also in our results release is that the international operations are loss-making, but we see a clear improvement there. In our first half report, we said that international operations were last year first half, they had a loss of a bit more than €1.1 million, and now in this first half it was around €500,000, and that's without IFRS 16 impact, which we have here included, so it's a bit smaller loss here. And Finland is really operating with the EBITDA levels of 11%, and actually with this IFRS 16, it's actually impacting quite many KPIs, as you probably know. It's somewhat better, so around 12% or so. And really, if we think of the Finland profitability, of course, Finland still includes the kind of headquarter costs and being a listed company and so on. So if we look at the kind of a pure market area Finland operations, then the profitability is obviously somewhat higher than that. Then view to our balance sheet numbers. So our net debt, that was minus €2.8 million in the end of last year, but then as a result of basically these acquisitions that we did in this first half, it increased to €8.2 million level, which is visible from the net gearing figures here. Also, of course, the IFRS 16 again impacting there, so the net gearing percentage without the IFRS 16 is pretty much like halfway that one, or around 25 or a bit more. So of course that's that's now making the differences even looking bigger. And actually same with the equity ratio as well, that the IFRS 16 growing the balance sheet, so taking that effect away will kind of halven the difference there. Another view to the, let's see, I'll take this one first. Another view to the balance sheet is the is about the goodwill values and intangibles assets. So these pillars there basically shows the total values of those two. So the goodwill value, well, that I guess is obvious, but then in the intangible assets we have the basically the valuation of the customer base of these acquired companies and businesses. And in the first half this year, total value of 20 million euros, around 16.2 million of that is the goodwill value, and the rest 3.8 is related to this valuation of the customer base. And there we can see how this has been developing throughout the years and throughout the acquisitions. So in the first half, these goodwills and intangible assets of our total assets increased to 38%, but then in the second half, 17, we had the share issue close to 10 million euro share issue to the institutional owners, and that then lowered the relative share of that, obviously the absolute amount of being the same. And now during end of first half, that has increased to the level of 36%. And then if we actually back to the previous slide, this shows even more in detail in the timeline how we've managed our financing through different transactions in line with our M&As. So if we start from the beginning of 2016, there we still had the funds raised in connection to the first half listing in the end of 14. So we used those finances to finance our first M&As, and then in 17 we did another 2 acquisitions there, and then we increased or raised a loan of closer to 6 million euros, and then as already told, we had in the latter part of 17 we had this emission for institutional owners, and then 18 no transactions there, and again this year we had the loan and M&A emission. So basically in connection to each M&A we also had this emission as well. And also the 2 personal emissions, not that much of a financing operation, but committing people to the company and providing the possibility to invest to the company. And there obviously we are trying to find or managing a balance between equity and loan in the way, and have it in the optimal level in the way that not to dilute the existing shareholders and ownings too much, but then as well using the external loan leverage there, and trying to find a good balance with those 2. Then let's have a brief look of the Nixu share development and how our journey as a listed company have been. So as said, becoming a first not listed in 14, and then last summer as a main list company. And this is how it looks. So the blue graph there showing the Nixu price development. So starting at the level of 4.4 euros in end of 14, and then 11.3. I guess that was last Monday, and today have been somewhere in 11.65 or something like that. But obviously fairly good development in the big picture comparing to the average index development of OMX. Also the volume, obviously we are still in the small company, and I think there's volume for smaller investors, but obviously for bigger institutional investors it might be more difficult to find enough to buy, so to say, but that has been developing as well. Number of shareholders, so this is also how it has been quite nicely developing to the level of 3,200 owners at the moment, and then if we look or think of the owners as such, there's no big single owners dominating the ownership base, but really different type of owners. We have big institutional kind of a long time owners like Varma and Ilmarinen, and then also what we also want to always point out that our personnel is quite well having the ownership at Nixu. So we've had the 2 employees share issues that you saw in the graph there. So those have been quite well perceived, and normally normally around half and even more of the people participating to that. And then also we have in Finland we have an employee fund that makes basically through that all employees in Finland are the owners of Nixu. And nowadays it's Nixu employee fund is already 23rd biggest owner of the Nixu, and then have been kind of growing there all the time. And that actually was my brief set of the financials and Nixu share, but do we have any questions to those materials?
Matti Riikonen, Carnegie. When you mentioned that Finland is bearing the headquarter costs, how big organization do you have here as the kind of, how do you define headquarters? How many people do you have?
Petri and me, and there's well, I think that's an overall statement that I think every group company have in their home base some of these costs that relates to even starting from the expenses relating to being a listed company, and obviously having the staffing for group reporting and all that, but that's not something that we have made visible. How much is that? But I would say that I don't see it's anything out of the levels of any other company, so to say, as an international listed company. So.
Right. So if we think about your EBITDA margin target for 2024, which is 15%, so is it fair to assume that Finland, without the kind of headquarter costs, would be roughly in the 15% EBITDA margin level already? Or is it that you would still need to improve your performance also in Finland to get to the 15%?
I would say that Finland is already in a pretty good level, but certainly I think we can improve here as well. But about that, getting to the 15% level, I think Petri will come back to that about those drivers, how we get there. So perhaps we tackle that question a bit later.
I asked that because I think it's a good thing that you mentioned now the Finnish kind of profitability, because that will be used as a kind of benchmark how we think that other country units can gradually grow to the level of Finland and perhaps hopefully above.
Yeah.
But any kind of idea that would help understand how the other units, country units, are getting to that level would be very helpful.
Yeah.
But maybe that's coming in the next session.
Petri will come back to that topic.
Okay, thanks.
Question serves as a good bridge to Petri's part of the presentation.
Mikael again. If you can show the pie chart about your clients. So this tells two stories. One story is that you have a diverse client base, which is nice, and the other story is that there's only a handful of customers where you have kind of like, where you can say you have a strategic position in that client and you are strategic partner for the client. So going forward, how do you think about your client base and your strategy? Is it like getting into these big enterprise scale clients and focusing only on a handful of clients, or how do you see this developing in the future?
Yeah, Petri can take that in his
I'll take
presentation.
later as well.
So yeah, but good question. Good question. All right. Anything else, or do we welcome Petri back on stage again?
If you have a good questions regarding our asset base, then Janne is the guy to ask about that. But okay, thanks. Thank you, Janne, for your part, and let's go forward. And I think I'll get into those questions as well in the next part of the presentation, and going into the growth strategy and ambition and overall, obviously what we are trying to do. We issued our growth ambition levels in August, and trying to explain the thinking behind that and where we are aiming. Obviously, this is the vision statement that we've said earlier, that commercially being the go-to partner for cybersecurity services in Northern Europe, and especially for digitalization, meaning that these digital business and industrial IoT provider or services would be the ones where we want to tackle. But then, of course, being the best workplace is very important for us, as we are talent-driven organization, and that's still the kind of the key differentiator for us, of having the best people. And just as a nice anecdote, talking about the Northern Europe and why Northern Europe and why it's good to be active in the Northern Europe for digitalization. This is a European Union chart about how digital is Europe, digital economy and society index issued in 2019. I think this came out in August, and it appreciates 5 different elements of digitalization: connectivity, human capital, use of internet services, integration of digital technology and digital public services. And there's the ranking of the different European economies, and there you can find Finland the first, Sweden second, Netherlands the third, and Denmark the fourth. So obviously quite nicely our operating markets, and the kind of that highlights the fact that here, when working with the clients in this area, we can actually be in the forefront of digital transformation and doing the stuff, at least in the European scale. Obviously, you could state that in China and US there's a lot happening in the digitalization as well, but in the European marketplace, I think we are in the right markets. We are working with the forerunners in this market, and that's obviously a nice place to be. This step diagram I've showed earlier, and now I have let's say some yearly figures which have been typically asked from me that, okay, when does what happen? So now there are some years, tentatively have to say, but there are some years placed, and the story obviously has been that 2015, 2017 we were in the planning and building phase, so rapidly expanding out of Finland, acquiring companies in Sweden, for example, and in Netherlands. And in 2018 we let's say entered a new phase where we are actually international, where we are truly international, and at the same time we need to grow further. So we are growing, but also establishing what we have, and that is a big job. So bridging the gaps, making everything work together, building up the scalability for a larger organization, and simultaneously keeping on growing, looking into new markets and expanding doors. But that we feel is the time that we still want to remain for a few years more, because the market is changing. The cybersecurity market is now maturing, it's growing heavily, and now it's the time to make that effort. We can't wait until 2024 and then start to grow again or something like that. Now we need to press the gas, and that's been the whole thinking behind the ambition statement that we gave out. But obviously, Mikael said earlier that this market is heavily invested and not so many companies are making profits, and obviously for a you can only be Tesla if you are not making profits. So for any other company, I think you need to be making profits at some stage, and that needs to come at Nixu as well. And obviously we want to be above zero level all the time, so we don't even want to go to negative. But then at some stage there needs to be the time when we leverage the One Nixu platform. So we leverage the work that we have done integrating the entities. And then we've now said that 2024 could be the time when the market has matured enough that we are first of all large enough, and the market has matured that then we leverage the platform. But of course this is subject to change in a way as well, that if we see that end of 2023 the market is still continuing to grow at rapid speed, maybe it's wise for Nixu also to continue rapid growth. But this is the kind of where we've set our aim now. And the strategic themes towards this goal and towards the financial objectives that we stated, we've outlined five themes where the lean profitable growth is the kind of, let's say, the foundation. So how do we build up the profitability? How do we increase the profitability within Nixu? And it's not one big thing that we can do. It's a lot of small things in different areas around the company. And then, let's say, driving our business forward are the four different themes. Cybersecurity talent community, being able to address the talents in the global cybersecurity community, talking to them, building the brand awareness. In this business, as said earlier, it's very much about the trust. And first of all, you need to have the trust within this cybersecurity talent community for recruitment, but also for business purposes. And we need to do more to build up that reputation globally. Then from client perspective, how to build up services and how to build up this partner model towards the clients and serve larger deals, larger agreements with our clients, and build up new services that are serving the digital transformation. Then let's say a little bit on the background is the data-driven services on top of platforms. And that means that we also want to digitalize our own business. We want to digitalize the way we do work. So we are also investing into that component. We want to be data-driven ourselves and utilize more of the data that we get from our business. And that's, even though it might sound a let's say a very obvious goal, but it's not very obvious for most professional service companies. That it's quite hard when you're only working with lots of different people and their computers and so on. How do you transform that into digital mode? Because you are not. It's a different thing when everything is already digital. Then you can start harvesting the database and so on. But most of the human work is not very digital by its nature. You might be using word processing and so on, but unless you do a conscious change and change the way that you do the work and where do you put the data, that's not very easy to be done. And that's why we are also putting a lot of effort into that, because we see that will be a key success factor in the future. And when AI becomes mainstream, we can utilize machine learning and AI as part of our human work as well, build expert systems and such to support the work that we do. So this is I would say that if we would be on a 5-year strategic path of selling the company within 5 years or something like that, we shouldn't be investing into this area at all. But because we see that Nixu is doing a forever growth path, this is an area which is a must-have in the longer run, and we need to be doing it to get our business in the shape of the future. And then expanding market presence. How do we grow in the European scale to address all of those markets where we want to be? And now deeper into the actual targets that we had and trying to remember to answer the questions that you also had. So we set ourselves a growth ambition of growing 15 to 25% organically each year. This forward and additional 10% as a compound annual growth coming through acquisitions. And that also highlights a little bit the ambition level, that how much do we want to grow via acquisitions and how much we want to grow organically. And obviously the point here being that we see that this market is growing and there are possibilities for organic growth, and that should be the main driver for growth. But then at the same time, yes, we want to do acquisition as well to augment that growth. And that should take us into about 100 million revenue level by 2021, which is actually quite close, but that's where we are. And this graph highlights that thinking a little bit. So 40 million our last year revenue, and 2019 to forecasted about 35% growth should bring us into this level. And then there's the, let's say, the high line, 35% growth, 20% growth, and 25% growth, and that's how it should look like when we are growing there. And where do we end up? That of course we don't unfortunately have the capability of forecasting our revenue in 2024 yet, but we believe that what the things that we are doing are able to give us that boost and take us there. And at the same time, the history is there. The kind of the earlier history and the growth that we have been doing for the past 5 years, I think that's pretty much in line with that ambition level that we have. And then of course now trying to answer Mikael's question that how do we build up the partnership? First of all, it's about building trust. So typically when we enter a new client, we are doing separate assignments, we are doing different things, and let's say that we get in through a very traditional way, doing a security assessment for the company, or red teaming as they like to call it nowadays, or something like that, that you test the security and you find that there are vulnerabilities, there are flaws, and then you sell something else in addition to that, then you sell something else, then you widen up, and there the kind of the holistic portfolio that we have that helps, because we have different components that we can bring into the game. And once we manage to build the trust, then we can start offering a continuous service streams and truly working together. And that's obviously kind of the end goal for all of this. And then how large can a singular client grow when we are there? And even if the client says that, yes, you are our strategic partner, we want to do everything in cybersecurity with you, then it's pretty much dependent on the client and its business that how large can that one client for us to be. But we want to make sure that if the client wants to make that leap of faith and partner with us, we have the capability to serve them with all of the things that they need. And trying to remember Mikael's question, I think the thing is that obviously we don't have too many of these continuous service clients or cybersecurity partner deals yet. We only started doing them in the 2018 or got first of them going. And why it's not that fast work is that it's totally new business. We are not outsourcing, we are not taking over existing work. From our client's perspective, it's typically investing into something totally new or wrapping up the things that they are thinking of doing under this one frame agreement contract. So it is a developing market, and it's not something that we would take from someone like a IT outsourcing, where you are like changing IT outsourcing providers from year to year, and then you're getting these deals. In this area, it's not about that. It's about building the baseline from smaller assignments into something bigger, and the client's need is increasing at the same time, and their like spending is increasing. And Janne showed that we had at the end of last year we had about 400 clients, where we are obviously missing the Danish clients because they were not there at the end of 2018, and I think that figure was about the same in 2017. So we have actually succeeded in our task of not increasing the amount of clients, but increasing the amount per client. And I think that's still a very valid goal, that with 400 clients, if you are able to grow them, choose the right clients and grow them to the size of the largest 10 clients that we now have, I think that's much better goal than trying to extend the client base and then build up towards 1,000 clients or 2,000 clients and so on. And that is the strategic choice. So rather have smaller amount of enterprise class clients than to extend clients in a huge amount. Any questions at this point about the growth target setting? There's one or two.
Maybe it's coming in later slides, but you haven't touched upon the industrial IoT and sort of a truly scalable business opportunity, which you alluded to in the previous year's CMD. So what's the situation with the industrial IoT operations or efforts?
Yeah, I'll come to that a little bit later. Yeah,
okay.
Good question.
Yes, just if you could clarify a little bit what is a typical involvement or development in your client process when a client first becomes a customer of yours and you do sort of a basic transaction. Is it how often do they sort of, if they form a process and policy how to protect, how often does that get sort of updated and what is the involvement in
our
the
process or the
no
kind of the client's process?
their process.
Okay, yeah. So when we work with them and create a
So you
security
create the
posture,
cyber
how
policy.
often we come back to that and
Yes,
adjust
yes.
it? Yeah. Good question, and obviously very much dependent on the organization. So I guess you could also ask that how many times they change their organizational model and so on, and all of these things affect to it. I would say that it's like when I started at Nixu, it was very typical that the clients bought a security policy. So please write us a security policy, or rather give us one that you've already written to another client, and it can't cost that much. And that was a very typical assignment at that time. And so you did information security by writing a new policy every 5 years or something like that. Nowadays, when the threat environment is changing so fast, that's not actually even the way that you work. So we talk very much about this adaptive security, and that's like always on. So these sort of projects where we would do something big for the client and then go away and come back after 5 years, they don't actually even exist anymore. So it's much more smaller scale things, one thing at a time, and then the next one happens. In consultancy, in advisory part. Then, of course, if we are doing a project around digital identity, for example, that could be such that we do a bigger project now, and then we continue supporting it, but then we come back after 5 years to do the next one. But most of the work is very much ongoing, much more small scale and adaptive along the way. More questions?
Matthias Kjell, private investor. I was just about to ask regarding these continuous services. I understood that you are still quite a people-driven business, so hourly paid mostly. Is this, when we see continuous services, is this also people-driven? And if not, what is the most significant part that is truly scalable?
Yes. So then we come back to the slide with the 4 different business models. So we had 2 types of continuous services. We had the managed security services, which are let's say more scalable. I don't know what is truly scalable, but let's say more scalable than human labor, but obviously also needing human component. And that's the most scalable component. And then we have the other continuous services that have human element in them, and some of them are more scalable. Let's say support services, where we are offering value-based support, and the client doesn't know how many hours are associated with that and not. And then some of them are more human labor just turned into a continuous service agreement, and there typically is some association also with the time spent with that agreement.
Okay. And then a small follow-up question. Can you still hear me? Yeah. So how worried are you down the line when it comes to employee turnover? It's clear that it's one of the important targets of Nixu to be the best place to work, but what's your own opinion on that and the cost of turnover and recruiting more, considering that people will probably also in the future be the most important asset of Nixu?
Yes, very good question, and that actually brings us nicely into this next slide. So also an ambition statement, maybe more internally oriented than externally, but having 1,000 Nixuans by 2023. I presume we were 2 people short of 400 in the last board meeting, so I presume that we are past that already. So there's a quite an increase still planned, and how to get there, how to keep the people. That's of course, I can say that I'm worried about it, but it's a main topic for me. That how do we be the best workplace? How do we keep the people engaged? And as said, we can't be the best salary payer, so we need to be good in other ways. And of course, the main thing is to have the best assignments, the interesting assignments for the people, because they thrive by doing stuff and learning while doing. Our employee satisfaction has been constantly improving, I think, and we had the set goal of being best place to work. We measure this Happy at Nixu questionnaire in our quarterly pulse surveys, and then we've also initiated this employee net promoter score measurement, and I think these scales are going nicely forward. Our employee churn rate has been traditionally below 10%. In 2018, I think we were a little bit above 10%, but still I think on a good rate. And even churn is kind of hard question, because I think that having a 0% churn would not be good either. So you want to have some turnover in the company as well. But so far so good, I would say. And but that's fine. We are not a democracy, but this is the one thing that the employees finally decide, that how good we are or not. Then the question about the profitability, and there Matti was asking about the Finnish profitability, and I think that Finland, yes, we know that this is a level that we can reach with what we are doing. Obviously, still, I think in Finland we can still improve, so we are not in an optimal level even in Finland currently. And these are the, let's say, the ladders where we see that growth will come along the years. So first of all, obviously, that the organic growth brings us the scalability in the big picture. So we are growing the business alongside. Then the business units, they are measured with the gross margin, and obviously the gross margin is affected by several things. One of them is the prices that we get from the services, and in that area, for example, outside of Finland, where we carried a little bit of the burden of these acquired companies, smaller acquired companies, and the prices that they are able to get from the market, and the less brand recognition for Nixu. I think that on the price level we can increase quite much while increasing our brand recognition. Then is the utilization of the people. So as long as we are in the consultancy business, the utilization is a key element, and that can still be improved further. Then comes the scalable services and how much we can actually add the profit from the business that we are doing, and that's also increasing constantly while the share of the scalable components are growing. And then finally comes, of course, the salary costs, and they're obviously, even though we want to be talent-based organization, but we can't be hiring all the most experienced and most expensive people all the time. We also need to bring in juniors. We need to bring in new people and keep the average salary level on a good level and combine that. And all of those feed into the gross margin, which is not a one-time thing to improve it from one level to another. It's more like that every year it needs to improve one bit at a time. Then, of course, as we are looking towards larger deals and bigger clients, getting a larger client obviously is a tedious process and contains quite a lot of sales cost when we get the client. But once we get into a larger level with the client, typically the sales cost per euro revenue is lower. So obviously we are looking into lowering the overall sales costs per revenue along this time. And then comes the indirect cost, the group cost and headquarter cost that Janne mentioned, but also the IT cost and such, where we have the goal of growing them less than the revenue as we are growing. Obviously, we need to invest into new tools, and we need to invest into new processes while we are growing. But if we manage to grow them less than the revenue, then we are generating EBITDA in the between there all the time. So these are the key components where we see that the profitability increase along the years will come. And then was the managed services, which we already discussed, and there we have set the goal that, or calculated that it should be above 50% or above of our revenue by 2024. And even if we are stating this, it doesn't mean that the consultancy part would diminish. The consultancy part will grow as well, but because of the fast growth of these services, they will reach the equilibrium during 2024. And how we see these managed services, and now we come into IoT question as well, that we, even though the Cyber Defense Center has been the one first initial big managed service that we have, it's not our intention that it remains the only managed service that we carry. So the idea is that while we are building on these cybersecurity partnerships and the client intimacy, we should be able to offer different managed services to these clients. And the Cyber Defense Center is there already. The managed digital identity services we are actually now taking into use more and more, transforming the old project-based business into a more managed model, offering the digital identity solutions as a service. What we are starting up is a product cybersecurity services, meaning that when the clients are developing their own products and IoT products and their technologies, we have a capability to offer different technologies and offer as a service this, let's say, securing their product development and making sure that the products are done securely. I don't go into too much details in the areas yet. It's a small business, but it's starting up and it's very, very sought after at this point. And there we are also building these scalable elements. And then, of course, in the security industrial IoT area, we see a lot of promise there, but it's really hard to state yet that how it will turn out and what's the thing. We've been piloting different concepts there, and maybe the kind of the thing that I can state right now that, for example, in this IoT device fleet management area, there's a possibility to find business models where we could actually price the service per device, not per hours worked or even a bulk service for the client, but a per device type of pricing. And obviously, should we find a business case that's fitting to that model and the clients are buying into that could mean a whole difference to our business case and our work within the industrial IoT. But that's still a future. It's not the promise. And as said, we are just piloting the concepts and trying out what the clients need. And the whole industrial IoT area is still such in a emerging phase that it's really hard to see how it will turn out and what's the business model that will succeed. But I guess my promise to you right now is that we are very, very heavily into that and looking and trying to understand that where could we fit into that game and find these business models that are value-based and device-based models. Any questions at this point? Good. Then the market areas and our statement of having 5 market areas above 25 million euro revenue in 2024. And that's of course a bold statement because currently we have 4 market areas and we are there still missing the 5th one, and also obviously even in Finland we are about on the 25 million euro rate. So there is still way to go on that level. But this highlights the fact that Finland can't be the only large area. We need to grow the market areas elsewhere as well. We need to bring up the scalability. We need to bring them on the enough level to serve the local clients. And as we've said to our market area leaders is that Sweden is double the size of Finland and Netherlands is 5 times or 3 times the size of Finland. So obviously they need to be much larger than Finnish businesses is when going forward. And why we've chosen the focus area north of Alps, i.e. the northern Europe, and I get lots of questions about this northern Europe. I'm starting to believe that maybe we should have talked about north of Alps immediately because maybe that's more concrete. I heard that the Dutch refer to Western or Central Europe as something in Eastern Europe, and when we talk about Northern Europe, they hear Scandinavia and not themselves, and so on. So there's lots of ambiguity, but maybe north of Alps is a good explanation. And again, repeating what we've said before is that we want to have the similar cultural baseline. There's the English as a working language, and there's a short travel for competence sharing, meaning that people can work with clients in different markets. And obviously the kind of the questions of entering the UK market or German market will be the big ones for the future. And what we've said so far is that mergers and acquisitions will be the main way of into those markets. And there we would rather want to find something bigger to join the company than this 20 people size company that we have acquired previously. At the same time, we want to keep consolidating the existing market areas, and obviously you can calculate that even with a rapid organic growth, reaching the 25 million rate by just organic growth in our markets may not be enough. So we want to keep on consolidating the markets as we can. But there, of course, comes the question that how much we want to pay and what's available and what price. So far, there is a lot of companies still available. There is a discussions ongoing constantly. So we don't see that path has been let's say done yet. There is definitely room to grow in that area as well. And that concludes my presentation for this CMD. And now I think we had really good questions already along the way, but we have some time still for the questions. And let's be happy that the client didn't make it, because obviously he wouldn't have had time after these presentations. But questions and comments. And do we have anything over the webcast actually now?
We have a couple.
Okay, maybe let's take the webcast questions then now and continue to the room then.
Yeah, here comes the first one. So my name is Hanna Raiten, I'm Nixu Communications Manager. So I'm repeating the webcast questions here. So Petri, can you please give an example of holistic cybersecurity partnership? What does it actually mean? What kind of services or solutions are included?
Yes, a good question, which obviously again has many different answers regarding of the client and its needs. But typically, these cybersecurity partnerships they start from including the let's say the strategical, tactical and operational levels. So we are working with the client in all of those levels, meaning that we are working with their whole cybersecurity strategy, their posture on different technologies, but then also running these services like having the cyber defense center there as well. Which of the services are relevant to the client at which point? That's kind of a question that we don't really care. We are working in those areas that are relevant for the client, and every client is a little bit different, so they have different needs. And typically we draw a cybersecurity roadmap for them when we start. So we build up this plan on what needs to be done.
Let's take the second one. So if there would be a worldwide recession, so how do you see it impacting the cybersecurity market and Nixu's business?
Yes, a good question. And what we've said earlier is that we have a feeling that cybersecurity is somewhat defensive market, because the kind of the digitalization has already taken place. Many of our clients have faith in their digital business, and it's really hard to save on cybersecurity, because that would mean that you leave your digital business vulnerable to cyber threats. The cyber threats are not going away in times of recession. One could say that they are actually even growing during the times of recession. So we believe that the market is a bit defensive. But obviously, on a longer term, if all the digitalization budgets will be cut, then of course it will start hurt the cybersecurity market as well. I think this was quite visible in the financial crisis of 2009 as well, that we were able to grow our business through the whole financial crisis.
Good. Are you only planning company acquisitions in the future, or are you still considering setting up new greenfield operations like in the Benelux?
We obviously want to keep all the options on the table, and so far the preferred option is the acquisition of new companies. But should there be a market where we want to enter and there is no acquisition target that has a let's say agreeable valuation or agreeable culture, then of course the greenfield options and different options in that area are in our playbook as well.
Good. And then the last one. In the Nixu ambition statement, it said Nixu would be present in 5 market areas. So what is the 5th one? Did you say that?
There's a possibility for different betting companies to open up competition in that, and let's see who gets the closest. And that's, of course, we haven't set a target market to ourselves. It's more dependent on where we find the good potential family members. I think the good thing in our our size is that we have the opportunity to grow in many places, and the kind of the market size and market dynamics are not that effective to where we go. So that's why we've kept the options open. And there's a question in the back.
You mentioned that in your current markets in the north of Alps area, there's a sort of a similar culture and a way of operating. What would you say are the main differences if you go across Atlantic to the United States or to China? Is the market there or business model very different from what Nixu's model is? And also a second part, if you think about the level of cybersecurity awareness, is that higher or lower in Europe than in US or China?
Yeah, really relevant and good questions, and obviously can't say that have that much experience in that whole other markets outside of Europe. In States, we tried setting up business there, but obviously it's also a very competitive market, and just selling to there without having a local presence or larger local presence, that proved hard, and now with Trump's immigration policies and so on, that made it even harder. So we withdraw from there after the pilot period. In China, we've been active and working with some Chinese companies as well, and we know that there's kind of pace of digitalization is very fast, and obviously all the market reports are also showing that China is the fastest growing market in the world for cybersecurity. But then again, we are such a small company, and in China, obviously, the world politics or geopolitics are so much present that we've seen that maybe it's not our business to go there with the full speed right now. I think in Northern Europe there's things to be done, and about the awareness and maturity, I think Northern Europe is pretty much on the same level as the States. Maybe the States is a little bit more advanced in taking into new technologies and doing stuff there, but not so much advanced that the skill levels also would be much different than in here. If that answers your questions at all.
Good afternoon, Hannu Vaneus from Nordea. Russia, threat or opportunity for Nixu?
If I would be joking, I could say that cybercrime is always an opportunity. so it's good that somebody creates demand in the market. But whether we are thinking of entering the Russian market, no, we are not thinking of entering the Russian market right now.
Mikko Leino, private investor. In the scope of the large enterprise clients, are you setting levels that you can reach out of their spending, IT spending, for example, and what kind of levels do you think you can reach? And is that a good growth opportunity going into the future?
Yeah, good question. Typically, the IT security spend of the IT budgets of the clients has been, according to Gartner, for example, 5% of their IT spend. But I think also these figures are changing because the digitalization, as I said, the industrial IoT and the digital business parts, they are not typically part of the IT budget. They have separate budgets and so on. And at the same time, I think the 5% is too little of a spend. So I think there's a pressure to increase that spend as well. Then, of course, a lot of that spend is still going for the technology reseller components, the firewalls and that sort of things, which we have not been addressing. And that's one reason why we were thinking and are thinking about that component as well. Then how much we can gain from there? Good question. Somewhere in between those areas and so on. And of course, it's good to remember that clients even typically don't want to outsource everything, so they typically want to leave some other provider there as well to keep us on the toes and do stuff. But if we can be, let's say, 80% of their cybersecurity spend on let's say these premium services, then I'm more than happy with that part.
So let it be a qualified guess that quite a lot of companies are underinvested in cybersecurity, and there's a need that maybe because of the reason that it doesn't hit the top line immediately, an investment in cybersecurity, it might take some time before they actually do it. In this conjunction, it's fair to say that major hacks could be catapults for starting the major investment cycle. But do you also see other, let me call them catapults, be it politics or rules or anything else that you might have in mind or might have seen that could cause this investment cycle to really get going?
Yeah, I agree with you, and that's been my long-term thesis that this area is still underinvested. So the investment will continue growing, and at the same time the needs will grow. I think the main investment drivers are the cyber crime, which means the breaches. So when they are happening, that's of course the best driver for spend in the company. So when the company or their neighbor company gets hit, then we see action and so on. Increasingly, of course, the regulation, like GDPR was a huge push in some areas and still is. So and there is more regulation to come. So that will fuel the growth. And then the digitalization in itself. I think many clients, especially on the larger enterprise side, they start to be well sophisticated in understanding that if they are really digitalizing their whole business model, they need to also pay heed for cybersecurity, and then they are allocating some funds to that already when they are allocating digitalization budgets. So I would say that those three are the main drivers for the growth.
When you talked about M&A-driven growth, you also said that valuations might come too high so that it's not possible. Do you have any kind of set criteria when valuations are still acceptable or when they get kind of out of hand? Or is it a moving target that depends on your own multiples and perhaps the kind of market valuation in general, and you would like to be below that?
Yeah, obviously generally I think it's a moving target and situational analysis for each case that we do. I would say that if we are doing a consolidation move and getting a company in a market where we already are, then of course we need to be really cautious of the multipliers, and definitely they need to be below our own multipliers and acceptable in a generic sense. Then again, I think as we are growing, if we see a great company in a new market, which would get us into that market, and that would also be really good company in many ways. I think then we can also think of the multipliers in different way. Or if you want to buy us into a new service area and see that this company can do it, that would be more a strategic move. So I think there is these both variables in the case. So far we always managed to buy something below our own multipliers, and of course that's the main target. That's where we are. And keep negotiating. And of course there are some companies that always value themselves too high, and that's then not doable at that point. But then we can always come back as well.
Rickard Farman, Danske. You talked about seeing customers shifting from resell to the services side of business. How often do you actually see this, and is this something you're focusing on?
Could you repeat? So shifting from using the technology
from the resale side of your business to actually gaining into your service side.
Yeah. That's actually from in our own operations that has not been that visible because the technology resale has been so small component of what we are doing. So it's not been happening that much. It's more a kind of, let's say, strategic thinking that if we want to build up these services, how do we get into play with the technologies? How can we become more familiar with the technologies associated? So that's kind of the thinking. But obviously for those companies that are more heavy on the technology resale side, they have been doing that and trying to transfer that business towards services side already. And this was also true with Esenta. They have in past couple of years they have built a nice array of different managed services on top of those technologies that they were previously reselling. So that is happening across the market already. Good. Looks like that we've satiated the need for questions. So I guess thank you everyone for joining here on site. We continue with the, let's say, unofficial part and with the CDC visits. And thank you everyone on Webcast. You are said goodbye right now, and with others present, we still continue with the unofficial presentations. But thank you everyone for my part at this stage. Thank you.